Okay.
Can you hear me talking to her now?
Put the mic near Eva. Let me see.
Hello. Well, we're just gonna have to talk like this.
Yeah. Talk in the middle. Yeah.
All right. Awesome. Well, welcome, guys. We're about to get started. Hope you guys are having a good and productive Monday.
Yeah.
I hope it's just an all right Monday.
No,
I'm just kidding.
Productive Monday. You have to start the week off strong. I think there's somebody like.
I wonder how it was sounding when we were at Starbucks and the cars were going.
And the bus was stop was right in front of us.
Oh, that's funny. All right.
Hi, Steve. Steve is on here.
Hey, Steve. Who's Steve?
Steve Julian.
Oh. Oh, hey, Steve. How are you?
You ready?
Are you sure you don't want to use this one?
Can I borrow it?
Yeah.
Okay. Real quick. Welcome back, guys. We haven't been on live in a bit. Sorry about that. We were a little busy.
Oh, good. Long weekend.
Y'all be all right. Y'all will be all right.
Saludos desde Idaho. Hola, ¿cómo estás, Ricardo? Welcome back, Ricardo. Ricardo.
Oh, we're going to get it together with this.
Cool.
I know. We have some people who continually keep on logging into our lives, so we appreciate you guys.
Yes, we do. What do you guys want to talk about today? What are we talking about, y'all?
I guess for the people that are new to the live, welcome.
Oh, someone said hey.
Oh, hi.
Sundance Bug, hey.
Welcome, guys. We are real estate agents here in Southern California.
My name is Eva Cannon, and this is Nicole Ehangio, okay? We are your Southern California realtors, but we do not just work in Southern California. We go all over the states. So if you need us in Fresno, Modesto, San Diego, Newport, Laguna Niguel, all those places, we will be there.
We will be anywhere you need us.
Buying power.
You want to talk about buying power, your purchase power? Okay, we can talk about that. Let's talk about it. What do you look at in order to qualify a person? Like, what determines someone's purchase power?
Yeah, great question. So we would look into the income, right? And we will depict whether it's a W-2 earner or if they're self-employed using tax returns. So it mainly correlates with that buying power. Now, if you're wondering, right, because we had instances where we had to, like our clients were not too satisfied with the purchasing power. We have to look at other avenues. We have to look at other products, right? So it does hurt in a sense that you probably won't get the best interest rate, but we'll still make it happen. But if we can't prove you based off of the income that you give us, then, we can get you the best rate. So it's really just what are you willing to compensate? Do you want a higher interest rate, but you can get whatever you want? Or did you want a great interest rate, but only limited to how much you actually make?
Yeah, so that's actually a good question because I was on a phone call literally before I logged on here, and we are currently working with a client who wants to, boost up their purchase power. But again, boosting up your purchase power also is going to mean that your mortgage payments are going to be different and they're going to be higher. And that's something that not a lot of people consider because it's like, yes, you do want that $900,000 home, but can you afford it? That's another thing.
What are the payments on that one? Do you want a $9,000 mortgage? That's the question. You might be approved for that much, but do you want the mortgage that comes with that house, that price of house?
Oh, I don't.
And hello, One Shady. Thank you to everyone who's on YouTube today. We are here. We are Southern California Realtors. My name is Eva Cannon. This is Nicole Ehangio. We have our lender partner, Dean A. So if you guys have any mortgage questions about your purchase power, refinancing, investing, ask us. We are here to be a service to the community, a resource. So ask us all your questions, guys, okay?
Ask us your questions. And yes, CR, that's what we're trying to avoid. We don't want to put a client into a home knowing that they're going to be house poor after they get it.
Yes, exactly. And now after the 2008 housing crisis, they changed all that. So now, like Dean tells people, they only take into account 50% of your gross income monthly. So they're not going to let you spend over a certain amount for a house. So, Oh, thank you. Thank you so much. Thank you guys. But yeah, so roughly it goes if you're making 10,000 a month, basically think of it as you're able to actually dedicate 5,000 to your mortgage, but then you're also going to minus your monthly debts. Like if you have a car note, if you have credit cards, any reoccurring debts monthly, they're going to take out that obligation. And then from there, maybe your purchase power is 4,500.
Mhm.
Yep.
We have a question from Ricardo. Let's say I'm an independent contractor and I want to apply, but my brother-in-law lives with me and pays me.
Okay, so let's say I'm an independent contractor. Great. So let's say real estate agent because we know Ricardo. I want to apply, but my brother-in-law lives with me and pays rent. So we can definitely utilize the traditional products like FHA and conventional, and we can utilize the payments that you're going to get from your brother as well because he's going to be making payments to you. So if this is like a duplex or maybe a single family with an ADU, we can include that ADU or that second door into the qualification, which can boost you up. But now here's the thing. Under Fannie and Freddie Mae, under their specific guidelines, they will not let you use it cannot be the rental income cannot be more than like 30% of your actual qualifying income. What that means is if you make $10,000, your rental payment that they'll take in consideration will be like $2,000 or $3,000.
So they changed it from 75 to 30.
No, so 75% is with non-QM loans, which
Oh,
are like
okay.
bank statement loans, DSCRs. But if you're going the traditional Fannie, Freddie, conventional FHA, they're going to want you to have only use 30% of that income.
Ricardo, do you own your business? Are you a self-employed
He's
person?
a realtor.
Oh, he's a realtor.
Mhm.
Okay, I thought he was a contractor. Who was the contractor? Was there a
Oh
contractor?
no,
in
he
there?
said he would just
Independent contractor.
Oh, okay. Sorry about that. Okay, I see.
Good question, Ricardo. Guys, we have our lender partner on the live right now. If you guys have any questions or any scenarios that you guys want to throw out to us, put them in the comments. También hablo español. Si alguien tiene alguna pregunta sobre comprar casa, vender su casa, tenemos el prestamista aquí en el vivo. Entonces comenten sus preguntas aquí, nosotros los ayudamos.
Yes. And guys, we always like to reiterate, when you work with us, you are saving about $1,200 to $1,300 off top because not only are we covering your appraisal, which could be $400 to $800, we're also covering your general inspection, which could be from $400 to $600. And whoever gets pre-approved through this live with Dean, we will Zelle, Cash App, give you $100. Spend it however you please. Okay, guys?
Ricardo said thank you. Thank you,
You're
Ricardo, for
welcome,
commenting.
Ricardo. Thank you for the engagement.
The more engagement we get, the better, because we want to make sure that we're reaching out to the people that actually need us. So
Yeah.
keep
Yes.
commenting, guys. Keep commenting.
Scam. No, that is not a scam. That is real life.
Real life, guys. What lender is this that waives appraisals?
They don't waive it. They just cover
so
it.
So here's the thing, Omni. What we do as because we're a big team here. We're not a big team, but we're a very loyal team. Okay, and what we do with our clients that we don't look at our clients like money. We look at them like friends. Like we might need you guys in the future too, right? So we try to do everything we can to simplify this transaction for you. That way you can kind of see us as like a great image, right? We're not here to take your money. We're here to help you. Okay, so when we say that we will cover appraisal, it doesn't mean we'll waive it. It just means that we'll basically cover it for you. We'll pay the difference for you. Okay. Now, when it comes to waiving, we can get a waiver if you do put like 20% down on a conventional loan. We can file for a waive.
We can do that with any property, Dean?
Yes,
can
any
waive it.
property. Yeah, if you're putting 20% down, just because the bank wants to protect their asset, they're like, well, if you have 20%, if we own 80% of the house, we have a buffer, right? So if something comes up like a default, we'll have enough to like liquidate to cover our butts.
Okay. Nice. Okay. I hope that answered your question, Omni Beauty.
And just to reiterate, the things that we say are actually true. We cover our appraisals for our clients. We will cover the general inspection for you. And yes, we have already given somebody $100 who's got pre-approved through this live. So everything we say is legit. We are people of our word. So there's our DRE number right there.
Hey everyone. Hi, Trades. You guys are putting out great content. I need to get you to 1K.
Thank
Nice.
you. We
Follow
appreciate
Dean.
that.
Follow
Follow
Dean.
Dean so he can show himself, okay? We're trying
Yeah,
to
guys.
get Dean up to 1K. He's very shy, okay?
He can't show his face right now because he doesn't have enough followers. So follow Dean, guys.
Yeah, guys, I'm trying to be famous like Nicole and Eva.
Follow
It comes with a price, y'all.
him.
Great content. Speaking of content, we just went to the Watermelon Festival yesterday in Pacoima at the Hanson Dam, guys. It was real fun.
It was a Lottie goes my man. Lofty goes my man.
Lofty go.
What does that
Lofty
mean?
goals?
Lofty goes.
I think that means like big goals. Like
Oh, lofty goals,
Yeah.
my man.
Well, you know, if Dean would show himself in some content we're trying to make, I think we could get him there, but he's a little shy.
He's a little shy. We're gonna have to plan. We're gonna have to, I don't know, convince him some way. Typo, lofty goals. Him trying to be as famous as you two.
He's got some big shoes to fill, okay?
Hey, you guys know I did shave.
Oh, hey, Emmy. How are you? Emmy's back.
Hi, Emmy. Hi, Ann Tange.
We're gonna get Dean to 100K like I have on Instagram. You ready for
Yeah.
that?
He's gonna have to be ready. It's gonna happen.
I'm ready. I'm ready.
It's gonna happen. But yes, guys, me and Eva are trying to push out more content for you guys. We're trying to do different events here in the Valley just to kind of push ourselves out there and show you guys not only what type of things are out there to do during the year in the Valley, but also just to let you know that we are very familiar with this area.
We are. We're all over LA, guys. We're about to show you some hidden gems, some good restaurants, events, things to do. We got some real good stuff coming up that we're planning. Cause when you see us, don't only just think real estate. Just know that we run LA, like Natalie Nunn said. I'm just kidding. But no,
We
for
run
real.
LA.
Like literally,
That's
like we
that's
can tell
the
you
goal.
guys about different things in LA, like where to go get skincare, where to go get your hair and your nails done. People are just complimenting Nicole's nails. Look how beautiful these nails are, okay? Look
I
how
got you
fabulous she
guys.
looks. Do you think that this is we get services done that we can recommend to people, men and women, it's not just cosmetic. But we're working on these things. 2% commission on a deal. Is that fair?
3% concessions on a deal. Is it fair?
Oh, 3% concessions on a deal. We ask for that sometimes.
What
We've asked
else?
for that a couple of times, actually.
Talk a little bit about what the contract
Yeah.
says. Like, what else? Are you asking for anything else? Like, are you coming down on anything?
Yeah. And Ricardo, you actually brought a great point. I want to tell people this because a lot of people don't know this. It depends. So when it comes to concessions is basically an amount that you request from the seller to make release on your closing costs, your points buy down, your commissions, right? So concessions, you can only ask for 6% of the total purchase price, the value of the house, 6% on an FHA loan. Conventional, you can only ask for 3%. If you put 20% down, you can ask for 6% of concessions. With DSCR loans, you can only ask for 4.5%. So each product varies on concession amount. The bank will not let you accept more concessions past those specific guideline figures. Okay, so important piece that I want everyone to know here. Doesn't get talked a lot about.
Okay, so the bank doesn't let you accept any more than you need.
Yes.
And if you do receive more than what you need, then you could use that money and put it towards a
Rate
rate
buy
buy
down, purchase price.
So you can't. So here's the thing. Let's just say we have $1 million house and the closing costs are like $40,000, and he's going conventional 5% down. He can only ask for $30,000. So if his closing costs are $40,000, he has to come up with a difference of $10,000. You get it?
Okay.
Yeah. You can't ask for the full $40,000 just because the specific the product has a guideline attached to it. It says no can do.
Okay.
Yeah.
All right. So I hope that answered your question, Ricardo. Guys, ask us some questions. We're here with our lender, people from Instagram, Eva's TikTok, YouTube.
We're everywhere right now, guys. Where else should we stream? We should get on Twitch next.
We should just
There we
become
go.
streamers.
We should.
Yep.
You guys want to spin behind the scenes with us? I mean, that's kind of gonna be like yesterday. Yeah. Had a good time at that festival. Guys, we have to start doing more local community events. Like, it feels good to be out there with the community having fun, like just
Getting
good
on those
old fun.
rides,
Yeah.
trying out different foods.
Felt like a little kid again.
It was fun.
It was fun.
We got on a little kid ride that freaking dragged us. Spilled my drink everywhere. It was a lot of fun.
Nicole got me on a slide.
We went on the
So,
big slides,
I thought we were
guys.
gonna die.
I've been wanting to go on one of those.
I was
slides
like,
for
I
so
just know
long.
we about to ride off this thing. Like, there's.
And it was so funny because the person who was operating the
He
little
was
ride,
recording us.
he was so like concentrated. He was just like making sure he got the good
We
angles.
love a man who could get some good footage, okay? Men, if you're in here, if you really want to win a woman, take good pictures and videos, okay? Don't have us telling you what to do.
Gotta get the good angles.
You better, or be single. Those are your two options. Get it or be single.
I'm looking at the chat here on YouTube. It's a little crazy.
People just be saying stuff.
Sorry,
Guys,
bud.
comment, like, subscribe, and hit the like button.
Comment,
the
like,
like.
and subscribe, okay?
Like.
And also, yeah, like this live. If you're on here, just press like. It helps it. If even you're not the person who wants to buy a house, send this to your cousin and a coworker.
Mm-hmm.
Tell a kin, tell a friend, tell that heifer you hate.
Ricardo said, "I'm at an open house, always learning from you guys."
How's your open house going? We actually got a lead from an open house and then we lost it. Just that quick.
I know.
Ricardo's always at open houses on the side.
I know. On a
I
Monday.
see you. That's for you.
I like open houses. This is where I get a lot of my leads from. Open houses.
Ricardo, are you a new agent? Even if you're not a new agent, ask us some questions. We can help you out.
Yeah. Hey guys, what Eva said is actually very correct. So Eva and Nicole went to an open house. They got a listing appointment out of it, and they got another lead off of it that they actually wrote an offer for.
Yep.
So, and look, and it's not just to do open houses. It's you got to learn from the best. Learn from the two women here. You know, the two gals. They do the best here. They know what they're doing. I couldn't do it. Not in 100 years.
I love open houses.
You
Those
need to make the most
are
out
the
of the
leads who
situation.
just come to you. Like you look for like in real estate, people look for what's gonna bring people to me. Open houses. They're literally coming to see the house already. So
They're already.
what are y'all
interested.
doing? We are Southern California realtors, and we are discussing mortgages, the home process of buying a house, selling a house. You want to refinance, you want to invest, sell, maybe you're a first time home buyer. We're here to answer all of your questions. We're just giving a little insight. We like to be a resource to the community. So if you have any questions or you know someone who's thinking about buying a home or wants to, send them this live. Maybe we can help them, okay? And if you work with us, on average, we save our clients about $1,200 to $1,300 off top working with us because we're covering the general inspection, we're covering their appraisal, and if you get pre-approved through our lender partner, Dean, we're sending you $100. So that's how we are on average able to save our clients $1,200 to $1,300, but we also get their closing costs covered. So on average, we're saving people 20 to 40 grand each transaction, guys.
Mm-hmm. Malim said, "I have a 4.1 million commercial building and 1 million down and 6.5% rate has 14K month cash flow. Is that a good deal?"
So are you relating? So 6.5% is very low for an interest rate. Are you talking about? Is that your cap rate? 6.5? You entered in at 6.5.
What's his name? Malim.
Guys, we also do commercial sales as well. We're currently
Yes.
working with a previous client that we helped purchase a single family home with a 2-story ADU, and now he's wanting to purchase
A
a warehouse.
We love repeat customers, y'all.
Malim said no interest rates. So 6.5%. What is 6.5% then?
No, he's saying that is his interest rate, not the cap rate.
Oh,
That's your interest. Okay. What is your cap rate? What's the rent rolls? What does it produce to you? Because in order to find out if it's a good deal or not, you want to make sure that the cap rate. You want to basically enter in at a higher cap rate and then exit at a lower. That's just a good rule of thumb.
I only have 30 minutes.
Nicole has to leave, Dean. You might have to hop on live with me. Guys, follow my Instagram because we might have to cut this one and hop on to the next one. So go to Nicole's page. There's a video that we're both in, Home and Belly, HOMEANDBELLY. We have the TikTok running over there too. We might have to have Dean transfer over there because Nicole is a busy woman. She got a showing, okay?
I have to go, guys. I have to go.
Oh, Nicole just got a house lease in 30 days, guys.
Yes, I'm so happy. They
The
sent the
average is
wire
like 50 to 60 days. Our girl got it done in a month.
in a month,
If
and I
you
told him I
need
was gonna
a
get it done.
lease, Call
There you go.
her.
A housing lease.
Yes.
Not all of them though. This
Well,
one
if you
I just
need
picked,
to rent your house out and you want someone to help you so you don't have to worry about screening the clients or any of that, Nicole does
hit me
that.
up. Hit me up, guys. I do it all. I screen them. I call the references. I call their employers. Everyone. I make sure that you guys are getting good tenants. And yeah, 30 days. I think a little bit. Yeah, like 30, 32 days. I got it leased out.
That's my girl.
That's
Cap
good.
rate is around 8%.
So let me think about it. So 8%. So he's getting let's see, 14,000. Wow. So he's gonna get cash flow. Okay. What's your net operating expense, if you don't mind me asking?
Net operating expense.
Okay, guys, I do have to go. So jump onto Eva's live so she can continue talking to you guys.
Okay, guys. I gotta do this
Sorry. I
alone.
have to go.
Be nice to me, everyone. I don't want to hear
Yes,
none of the
be nice to
malarkey.
Eva.
Okay, be nice to me.
Or else you guys are gonna have to join the block party. That
And
block
I
party's
love
growing.
inviting people to my block party.
He said 56 per month.
56K a month. That ain't bad.
Okay, that's
Let's hold on. Can we reply to things?
I wouldn't say it's
No.
necessarily great, you know. Yeah, it's good. You know, it's good. It's good. It's good for being a commercial site. Okay, what I'd like to see is a little bit more, especially since you put a huge down payment. But nonetheless, I mean, you're still cash flowing, which is great. You know, I have no hesitation in that. Right? If I had that money, I would probably do the same. So I'm speaking out of a person that would do something like that. So yes, I think it's a good sign.
It's a good
What
deal.
what kind of commercial building is it?
And how was your experience working with the person who found you that commercial deal?
It's a good question. Did you enjoy the process? Did they make it seamless or did you feel like it was long and treacherous?
All right, guys, I do have to go follow Eva. We went ahead and commented her username here on my live, so make sure you follow her, guys.
All right.
Join her live from there.
Yep.
All right, bye, Dean.
All right,
Sorry,
guys.
guys.
All right,
I'll hop
Nicole,
on
take
later.
care.
Okay, bye.
Have a good day.
All right. Oh, we're all alone now.
I'm sorry, girl.
All right, guys.
Goodbye, everyone. I'm leaving. Oh, Dean's on there.
Oh, Lord.
Do you want me to take anything so you don't have to, like,
No, it's
you
okay.
got it?
You're back.
We're back, Dean. It's just us.
All right, bye, girl.
All right, bye, girl. What do you want to talk about today, Dean? What should we discuss?
Let's talk about some scenarios. I think that's because I feel like if people know the scenario, they'll be able to imitate that and say, hey, you know what, that's you're speaking something that I'm going into, right? Like I have this type of issue and I wanna know how to resolve it. So I feel like if we talk about scenarios, people might know exactly what we're talking about. I might need further guidance, you know.
Okay, what kind of clients are you working with right now? Like, who are the type of people that you see coming through your your pipeline right now?
So I would say I got about 2 refis done. I'm in the process of working on one, submitting the file in. This client owns a house in Manhattan Beach. He bought it for like 1.4 million, and he got a hard money on loan on it. He owes 1.3 on it. He wants to cash out at least 380,000. So the after repair value is like 2.2 million. And if anyone knows exactly how refis work, we go off of the loan to value, especially with specific. They have their own specific guidelines, right? So we are helping him in that sense. He does not have a leasing agreement. He's actually getting a tenant involved. But since he bought it last month and he's actually refining it the month after,
Wait, he bought it
it's
last
just
month
there's
and
a
he's
little bit.
refinancing a month later?
Well, yeah. So his intention was because he bought it distressed, right?
Oh,
So he
okay.
bought this house in Manhattan very distressed. He got a hard money loan on it, renovated it. Now he wants to refi out of that hard money loan just because
Okay.
it's interest only.
Mhm.
It sucks. It's hard to make money. So we're running into the dilemma that he has no tenant involved, but once he gets the tenant involved, the bank is going to ask for first month's rent proof of it with the leasing agreement. So another thing is he wants to make sure, because this is a DSCR loan, that the rents are pulling enough to make up for the mortgage payment. So again, we can make this happen. That's one of my files. Another file is there's a tenant involved. There's a tenant involved in this house that our client wants to get, and the closing day is actually next week. Their proposed cash for keys is also next week, but they're needing an extension. So now this is going to rough up the edges on my end because the bank is going to have to reapprove. And guys, if you didn't know already,
Is this Nicole's?
there are expiration dates. Say it again.
Is this Nicole's?
Yeah, this is what
Okay, I was about to say this sounds so familiar. Okay, so this is Nicole's. Okay.
Yeah,
Yeah.
so it's the exact. Yeah, it's Nicole. So
Yeah,
that's
this
what's
is a
happening
good
right now.
moment, a good teaching moment. Like if you have tenants, hi Mama Mila. If you have tenants in place and you're trying to sell your property, you need to come up with a plan before then, because the agreement that they had on this escrow was as soon as they opened escrow, the owner was going to serve the tenant a 60-day notice so that they could have a 60-day closing, right? But what happened is they didn't serve them until like 2 weeks afterwards. And the tenants are just like, well, that means that we have 60 days from then, not when you guys open it, and we don't really care. So yeah, it's a predicament. You need to make sure that you're super on top of that, because California is very, very strict when it comes to these tenant laws. They're not friendly
Yeah,
to
exactly.
the
And they suck with the tenant. So
Yep.
it's very harsh. Even I think my phone number is wrong, so it's 4146.
Oh shoot. Let me see if I can fix that. Imagine people have been trying to call you and
It all starts from the beginning. Don't ever buy a house with tenants. I mean,
oh shoot. Dean, I can't fix it now. I have to fix it later. I'm sorry.
Okay, just leave it. You're good.
Yeah, don't buy house attendants. Actually, when I was out, I just went out showing yesterday to Sonia, and there was a house that they aren't even showing the house to anyone because there's tenants in place. You have to just put in an offer. Once your offer is accepted, then you can see the house.
There you go. I've seen that too before.
Yeah.
And I mean, look, sometimes you can't see the house because the tenants aren't letting you in, right? And they're in the process of evicting. So it's not because they're hiding anything. It's really just because there's noise surrounding the house, right? There's a lot of hoops that you have to go over. And unfortunately, at the end of the day, I mean, you are going to get the house, but is it really worth you extending your rate lock, right? Because every time you extend a rate lock, it costs money. And typically they're usually 30 days, right? 30 days is a typical real estate transaction. Anymore, what's the reason, right? And the reasons could be tenants. It could be because inspections went for long before. There's multiple things that can happen in escrows. And guys, I think Eva and I, we have pretty much like a 95% success rate.
I've only had one that everyone that's got canceled, we rebounded. So it's not like, oh, it got canceled and that's the end of that. Actually, there was only one Alabama. That's the only one I've never had rebound. But every single transaction that we've had that canceled for some other reason, we found them another home. So definitely good to work with a team who, well, one, we advise these people not to take these homes because, like we said earlier, we don't just look at our clients like clients, we look at them like family. So we're going to tell them, hey, this is a messed up house, like it has these problems. With Abby and Kyle, there was a pipe that was connected to nothing underneath the ground. So when you flushed stuff down the laundry, all the dirty water just went into the crawl space. So there's definitely times and situations where we'll tell you, we will advise you to walk away from that house. So but don't get discouraged.
It's all about like being true to yourself, right? At the end of the day, Eva's not scared to kill a deal, right? And when I say that is the biggest complaint in this industry that I think of is commission breath. People feel as if they need this house to sell so that the agent or any third party that's observing the transaction needs that cut, right? But is 20,000 or 30,000 more important than someone paying 700,000 or $1 million for an estate? I don't think so, right? I always say this: lose the deal, not the client, right? You want to stay true to your clients at all costs, and Eva has the actual, like, she has that in her. Okay, that's her. She wakes up, she eats that. She just knows that. So, guys, like I said, you are taken care of. Like Eva was saying, you are family to her. You are not like a friend to her, and that's very important. That's very, very important. I'd say family, not business related. It's very important, guys.
Definitely. And yeah, so yesterday I was out showing clients some homes, advising her. We were actually trying to put an offer in on another property. The sellers were pretty disrespectful with their counter offer, so we advised her to move on from there. You can always tell when people want to play nice and when they don't. So sometimes it's best not even to waste time with certain people. And then come to find out when we did some due diligence on that property, it's not even insurable. So I always say that rejection is God's protection, because imagine we got our offer accepted and then we find out that the house isn't insurable and we just wasted $500 or $600 on the inspection and all that stuff. So sometimes things happen for a reason, even though you feel like, oh, this was my dream house, maybe it wasn't.
And Eva, we're in the industry of like pointing the finger at the end of the day, right? If we go into a transaction knowing that it's, to your point, not insurable, right? Who's gonna have cake on their face? It's gonna be us. It's gonna be the realtors. It's gonna be the lenders. It's gonna be the people that are supposed to guide, in a sense, because they didn't open up their third eye, right? They didn't think about what could potentially be wrong with it. They only thought for face value what this agent had told me, right? But at the end of the day, in the instruction notice, it says everything is deemed reliable, but also do your due diligence. And Eva has that value to go ahead and check on your behalf, right? Even if it has to be with going to the city or checking on her own, right, through other third party resources. Does not matter.
Yeah.
We take our name with purity. And what I mean is, we don't want our name getting slandered, and we take that very seriously. So we won't even enter into a contract if we knew there was things that are, hindering the sale. So take it like that, guys.
And honestly, I don't like poo-pooing on other agents, but their listing agent was terrible. She didn't know anything about her client. She wasn't advising her client well. She didn't even want to answer the phone most of the time. So you got to get someone who's serious, that is a full-time agent. There's a lot of people who do this part-time, do it for fun. I would not trust them with a $500,000 purchase price or even more. Like, I want someone who this is their full-time job. They eat, breathe, sleep real estate. That's my job. I wake up every day. This is what I do from the moment I get out of bed until I go to sleep. Only time I take a break is to go to the gym. I know y'all see it though. Just kidding. But no, seriously. It really is like that. Like, a lot of people wonder why their houses aren't getting sold and their agent doesn't even answer the phone, or they leave a number on the MLS that's disconnected. Like, there's just been so many different situations I've gone through where you really need to be vetting people that you work with, because hiring your cousin or a family or a friend or just someone that you know could cost you thousands.
Yeah, and it's biasy at the end of the day, right? Like, you need an agent to look, and excuse my French here, you need an agent that has some balls, tells you straightforward, hey, this is what it is. If you want your house sold, this is the value. If you don't, we'll go, we don't want to hold, I always say this, we don't want to hold the keys to your, we want you to hold the keys to your future. So we're going to allow you to make the first call. If that doesn't come in place, at least we tried going your route. Now let's revert back to my game plan, right? Plan B, as they say. So very powerful tool in agents. And I wouldn't say every agent has this ability, especially if you're hiring a family member. Because they're, your first point of contact is familial status. How do you think this agent that's a family member is going to tell you, hey, we need, your house is actually worth $900,000, not the $1.2 million that you wanted. right? So a lot of agents that are family members are very scared to even communicate that in the first place. But
Yeah.
that's why you want to conclude bias at all costs.
Exactly, because I'm not even taking a listing just to have it sitting there. You can get somebody else to waste their money with that. There's a lot of investing that you have to do to be a realtor. So we say all that to say, be careful who you choose to work with, okay? Because it could either make or break your real estate experience, okay? Speaking of which, don't want to say too much about someone, but it's just like we have these clients who bought their house sight unseen, right? They were out of state. They needed a realtor to guide them through the process. Their realtor got them a house in an area that one they don't like. It's not really a desirable area, but they also didn't know much about anything about the house prior to or after buying it until they moved in. So you need a real good person who's going to guide you and advise you and sometimes tell you things that you don't want to hear and not be afraid to. So now our client, they're trying to sell this house, and unfortunately it's kind of hard a little bit.
Yeah. And really, guys, like, I see this a lot too, Eva. A lot of people or a lot of homeowners think that you have to have the right agent, right? Guys, right agent is like 80% of it, 100%. But the other 20% is the property, unfortunately. If the property doesn't have the attributes that other buyers saw or see, then it's not always going to be the realtor, right? Because realtors, we have access to everything. We have access to things that other realtors have. It's not one is better than the other, but what one agent does better than the other is tells the truth, right? They're on your behalf. They act as if they are the owner, right? And that's what you need. You don't need someone that only knows about their commission and how to put it on the MLS. I think that's the bare minimum.
Because next week we're actually cleaning the house. We're doing a bunch of things to help try to get the property sold. So most people wouldn't be willing to go over to your empty house with a mop and a bucket and clean that thing like it's theirs. But that's what we're gonna do. We're gonna do whatever we got to do to get this house sold. So, do you guys have any questions? We have Dean the lender here with me. I am a Southern California real estate agent. My name is Eva Cannon. This is my DRE number above. And we are here to be a resource to the community, answer any of your real estate and mortgage questions. We can give you some purchasing power estimates. We can tell you about loan products, how the home buying process works. So if you guys have any questions for us, just drop them in the comments below and we'd be happy to answer them. Until then, we're kind of just going to chit chat about real estate and all these other things that we're seeing until we get some questions.
Yeah, guys. How's our YouTube and our other platforms?
YouTube, we see you. There's a few people on YouTube. Sometimes people are like, what are you doing? Because there's no board or anything I can put there. So they just come like, what are you talking about? So if you guys have any questions about real estate or mortgages, want to know something, let us know. I'm here. I'm a Southern California realtor, but I do not just work in Southern California. I go all over. So Fresno, Modesto, Jurupa Valley, Hesperia, IE, San Diego, Laguna Niguel, Newport. We're all over, okay?
Yeah.
We're actually helping a client in Newport Beach. Lovely area. Very expensive homes. Very expensive. His budget is like between 3 and 5 million.
There we go.
Yes. But have you ever helped anybody with that kind of budget, Dean?
3 million. The one that we just did. He had a budget up there.
Oh yeah. Okay.
Well, other than him, I did have one that was up to like 4 million, but I didn't close on it.
Okay.
Yeah.
Well, just so you know, if you have a budget that high, we can help you. Where is everybody here from? Let me see who's in live with us. How do you see who else is in here? I do not know how to work TikTok.
You see the number on top? It says like 2. Yeah, it looks like there's 2 people in here, including me.
Oh, okay. Well, hey y'all, if you're here, thank you for being here. We really appreciate it. We're just going over some mortgage stuff, real estate stuff, talking about all the things. I'm actually looking to buy a property this year. Dean will be helping me make that a reality. I'm super excited about that.
Yeah.
I send to the people to the hospital who look like an angel. See, that's why I don't like reading YouTube comments because they get a little scary. Like, what are you talking about? But yeah, on that note, I'm excited about this process. I've kind of been having to follow some rules that we tell our clients, like don't buy a car before you buy a house, don't do this, clean up that. I'm paying off all my debt. As of next week, I will be completely debt free, which feels amazing. I have no student loans, no credit card debt, no car payment. It's feeling good. So, oh shoot, Dean, did we lose you? Guys, I think we lost
Oh,
Dean.
man.
Okay, all right.
Nope, just doing some texting real quick.
Do you have people calling
We're
you
busy, guys.
from these lives? All right. Well, I mean, it's a little slow today, Dean. So we just go over the process? Let's just do a whole quick one and then we'll call it a
Yeah.
day.
Let's jump into it.
We'll call it a day.
I know you guys are tired, and there's a big basketball game today.
Who's playing? The
We got the
Spurs
finals.
and the Knicks.
Spurs and the Knicks.
Guys, I know stuff about sports.
Yeah, get you an agent that knows a little bit about everything, right?
Y'all want to learn how to scam? I'm just kidding. Oh yeah, I'm gonna have to mirror the screen.
Yeah.
Hold on 1 second. Ooh, how do you do this? I don't know how to do this, Lord. I have no idea what I'm doing right now. I can't even lie. Hold on a second.
Where's Nicole when you need her?
I know Nicole runs the ship. I am just here for real. Oh, that's a green screen. Okay, that's not how that works. 1 second, guys. I'm gonna turn this thing around. Oh, 1 second. Yeah, I gotta figure out the mirroring on TikTok. Oh shit. Yeah, mine is like completely different than Nicole's because I don't see that mirroring thing. Oh, there it is. They changed it. Okay, can you see now? Oh shit.
Yep.
All right, cool. Cool beans, brother. All right. Welcome everybody. It's Home Buying 101. I'm gonna redo this board soon, so don't you worry. Should I come closer?
Yeah, a little bit farther.
A little
bit farther. Yeah, just because you can't see the bottom. Oh, right there. Perfect.
All right. I'm tiny, y'all, so sorry. I'm doing the best I can. All right. Dean's going to go over some loan products with us right now. So there are 2 different types of loan products when you're buying a home. Qualified mortgages and non-qualified mortgages. Now, a good question that people ask is, why would I want a non-qualified mortgage? Dean, can you give us some answers to that?
Yeah, so let's just say we can't go the traditional route, right? Like you don't have the W-2s or you don't have the tax returns. I feel like me, I forget to do tax returns sometimes, but there's other products for you, okay? We call them bank statement programs. We call them profit and loss programs. We call them asset utilization programs. We call them DSCR programs. So what I like to do is put them in category place. Let me explain. If I didn't have the traditional items needed to qualify for a house, I will go into the bank statement world, okay? What we do is we take a 12-month duration of bank statements. We add up all the deposits, and you heard that right, all the deposits, and then we multiply that by a 50% expense factor, assuming that there are expenses associated with your business. Now, you can only imagine that deposits can be inflated. It can be from Zells, Venmos, PayPals, your actual income, right? Like your actual business. So all these producing avenues of where you're getting income, we'll just add it in there. We don't even check where you're getting the money from. So if you're like me, I gamble, right? Let's just say I get a nice day and I win. Then I could just put that right in my bank account. That'll count as a deposit, right? And that's aside. That's aside from my actual income. So we can use that, guys. That's going to be the best route if you do not have traditional statements.
Okay.
The next one will be something called a DSCR route. That is my second favorite one. Now, a DSCR route, they do require you to put 20% down in a FICO score, which is a credit score as low as 640. Okay. With this type of loan is we check the cash flow that the property produces in comparison to what your mortgage payment is. So, for example, if you do have, let's just say you get $4,500 for rent, and your mortgage payment is actually $4,500, we'll fund that. We'll call it a 1-to-1 ratio DSCR, and we won't even check your debts, right? We won't even check out reoccurring debts. We'll just keep it as that because we assume that this is going to be an investment property.
Yes.
Now, the next one is going to be one of my favorite, but in terms of like interest rates and benefits, I would say this is like the third, right? And it's known as the P&L, it's profit and loss. We can go as far as 24 months, but the typical is 12 months of a duration.
And for the bank statement and the profit and loss, you're gonna need a 1099 or 1120S. Okay, guys.
Oh, well, for bank statements, we won't even look at tax returns, and DSCR won't even look at tax returns.
Oh, okay, nice.
Yeah, so it'll be none of that. You only look at 1120S's and 1040s when you're going traditional route.
So you can still be employed.
No, profit and loss is going to be a non-QM loan.
Okay.
The profit and loss that we looked at with one of our clients, that was what we use as a tax return. You know, that's all we'd use on a tax return.
Good products for those kind of people, like self-employed, like a 1099 worker.
Yeah, so those would just be in the non-QM space.
Okay.
So we would look at your bank statements, your profit and loss statement. Again, guys, the profit and loss in the tax returns on your 1040s, that is only if you're trying to get approved the traditional route, right? But if you're trying to go like a P&L program, that's going to be something totally different. We're going to have a CPA construct this profit and loss of a 12-month duration. And then, again, they'll make your net operating expenses, what you get as a net. So, guys, different products. But again, if you are independent, we're gonna put you down to this route. If you're not independent, we'll go traditional route. You want to go as close as traditional as possible, and that's why I make this criteria of conventional FHA, bank statement, DSCR, profit and loss, and worst case asset utilization. Okay.
Yep. Okay, so we kind of skipped over a little bit of it going into loan packs, but that's okay. That's okay, because there's a lot of people who fall into that and they hear that, oh, we're talking about FHA and this and that third first, so they get discouraged. So it's nice to start out with this, guys. So if you are self-employed, if you're a content creator, a barber, hairstylist, lash tech, maybe you own a mechanic shop, any type of self-employment, you guys qualify for these non-QM loans. I will be using one of these when I buy my house. Me and Dean have already gone over this. I'm going to use the bank statement loan. And so the pros are this is the best option for self-employment borrowers. You get qualified without using your tax returns. The downside is that you're going to have to put a little bit more down and that there's like more conditions for the bank. But working with Dean, that's something we can easily bypass. Okay, guys?
Yeah, we'll perfect it. And guys, again, too, just to reiterate, right? If you're self-employed, you can use tax returns. You can use tax returns and still get an FHA or conventional loan. But in most cases, I'd say 90% of the time, or 9 out of 10 times, people write off a bunch of stuff, especially if it's an S corp or C corp, right? So and that has to do with LLCs and sole proprietors as well. We just write off a lot. We don't like to pay. We don't like to pay Uncle Sam a lot. So if you're in this bucket, or if you can resemble the scenario that we're talking about, definitely look into the bank statements. Or why not make your life easier and just contact us?
Period. Sorry, I'm trying to find something to hold this thing up.
Oh, you're good.
Sorry, guys. This line fell. I'm doing a bad job at this by myself. Nicole, come back. All right. So, first steps first for the home buying 101 process is getting pre-approved by a lender. Dean is over here telling us about non-qualified mortgages, which a lot of people end up that works for them because they're self-employed. Maybe they own another house and they want to use that as collateral for the next purchase. Another loan product that we see and work with frequently is VA loans. You want to tell us a little bit more about that, Dean?
Yeah. So VA loans, right? We appreciate these VA services, and in comparison, and like what we give them, right, is something called a VA loan, where they have no obligation to put any down payment. Pretty much, this product covers your down payment, and I guess the only caveat here is, I mean, there's really none. You just have to have the documentation, right?
Yeah,
just have your DD
there are a few cons to the VA loan. The property condition has to be of a certain, it can't be a messed up property. Like they want it to be livable. And then also, there's stricter appraisal process. So there's a little bit of a downside to it. And also, like with people like our last customer that we dealt with, maybe they're not qualifying you for as much as you want to spend. Was that what it was? That was what it was, right?
Eva.
Can you hear me?
Yeah, 1 second, I have a phone call.
All right.
1 second, guys.
1 second. But while we're here, my name is Eva Cannon. I am a Southern California real estate agent. This is Home Buying 101, where me and my lender partner, Dean, we go through the process of buying a home, answer your questions about purchase power. Maybe you're curious about how much you can afford in this market. Is it a good time for you to refinance? All these different things. Tell us your scenarios, maybe how much you make a year, what your monthly debts are, what your credit score is. We can give you a rough estimate of what you might be able to afford. If you're not looking for a home right now, maybe someone that you know is a friend, a cousin, a coworker, send this live to them, like it, engage with this so that we can help as many people as we can achieve the dream of home ownership. So we're waiting for our lender partner to come back. He's on a phone call. One momento. I'm gonna put this stuff back. I'll be right back. And I'm gonna check these questions on Instagram. All right. We're back. Oh, Dean is gone. Oh my gosh. Okay, guys. Well, I'll just go over this process. We don't need him here. All right. So after you've been pre-approved through a lender, you will contact a realtor like myself, or if you're somewhere else in this country, contact a local realtor who knows about the area that you're looking for. You're going to let your agent know exactly your wants and needs of a property. This will be the home type. What type of home are you looking for? Do you want a single family home? Do you want a condo, a triplex, a fourplex? Do you want a multi-family apartment type of situation? Do you know what size you want it? Do you want only to see houses 1,600 square feet or over? What location are you trying to be in? School districts, home features, your moving timeline. Do you need to be in that house in 2 months, a month? These are all things that as your realtor we need so that we can, one, know the sense of urgency that you're moving at, but two, so we don't send you things that just don't align with what you're looking for, okay? Third, after you've been pre-approved, you tell us about these products that the certain house that you're looking for. We're going to send you over a list of properties. You're going to go ahead and select which ones you'd like to see. My business partner and I will then come and show you the houses. Sometimes we go to like 2 or 3, sometimes we go to 10. It doesn't matter to us as long as we find you the right property. And say that we do come across the property that you feel like, hey, this is the one for me. Great. What we're gonna do is we're gonna go back to our office. We're gonna look at the comps of what things are selling in that property. I mean, in that neighborhood, in that town community. We're gonna look at what's selling similarly to the property that you like. We're going to see, do you need your closing costs covered? Do you want, the furniture that comes in there? Typically, we do ask for the appliances like the washer, dryer, fridge, microwave, dishwasher, those type of things. Those are typically included in the real estate sale. But sometimes people want, the TVs in the backyard or the patio furniture. Sometimes people want the cat. If you tell us that, we will write that up in the offer. We'll send that over to the selling side, and then hopefully it gets accepted without any rebuttal. But sometimes they'll say, hey, we want the terms to be a 30-day escrow instead of 21 days. We don't want to give you our cat. Like, there's so many different things that happen, but once we all come to a resolve on what we all agree on, great, we're opening escrow. Congratulations, your offer's been accepted. Now here's the fun part, opening escrow. When we open escrow, my business partner and I, we're gonna send you an email, which is giving you all of the date deadlines of when certain things need to be done. By certain things, I mean, you're gonna have to wire in this thing called an earnest money deposit, which is like akin to a security deposit. This is just telling the sellers that we're serious, we have some skin in the game, and it's also allowing us access to the property to do our investigations. What are investigations, you say? Investigations would be our inspections. This is when we're doing our due diligence. So we're doing our general home inspections, sewer inspection, termite pest inspections, mold inspections. We're calling the insurance. We're making sure that no huge claims have been taken out on the property and that there's not going to be a problem insuring the home. This recently actually happened twice to me. One, the roof was uninsurable, and second, the sellers of the property had took out like a $400,000 insurance claim on this property to get some things fixed when there was a leak. So now that affects my client's premium and all that jazz on the insurance. So these are all things that we're going to figure out during our due diligence period, our investigation period, as they call it in real estate. And say that we do find something, say that the HVAC is not working. Well, what we're going to do is we're going to go back to the selling side, say, here's the problems that we found within the house. My client would either, you're going to choose, do you want me to get the credits for you so that after escrow closes, you can have the money within your pocket to pay for these things to be repaired yourself, or we can ask the selling side to repair them for us before close of escrow so that you don't have to worry about it. Dean's back. All right, Dean, request to be in the live. So the next thing that happens after we've done our due diligence is that we're gonna have the appraisal done. This is where the lender's coming in and they're gonna send somebody from the bank to just confirm the value of the property. Okay. Goodness gracious, guys. All right. Dean, what are they looking for in the appraisal from your side?
Yep. So sorry, guys, I had a call to take care of. But when it comes to appraisals, the bank hires this certified licensed appraiser to go ahead and have an opinion of value, so that the bank at least knows, hey, am I lending these people more than what the house is actually worth? So they conclude it via an appraisal. And guys, appraisals, again, it's opinion of value. It does not need to be factual. Okay, we just need to justify what those values are coming into, and that's simply what an appraisal is.
Do you know some things that they're looking for in an appraisal specifically?
Yes. So what they're looking for is comparables. Okay. So there's different types of appraisals. If you're doing the simple comparison, comparison of the market of comparison approach, something around those lines. That just means that they're taking apples to apples and then comparing the values between the two. Of course, they consider how the inside the renovations are done to further go their supplement and adjust the values accordingly. Now, if you're talking about commercials, they do something called the costs approach. What that means is they're going to essentially take everything that you've done to the even assuming the rent rules, and then they're giving a value upon that. Guys, the same person is calling me. Just give me 1 second.
All right, guys. So yeah, like I said, that is when the bank is gonna send out the person to come look at the comparable properties, things that have sold recently that are similar to your house. That is all done between like the listing agent and the bank. So that's nothing that you have to worry about. The thing that we tell our clients, the main thing that you need to worry about is this inspection. Get that general inspection done, getting the sewer inspected if you're buying a single family home. Not so much for a condo or townhouse. Termite and pest inspection in California. 90% of the homes have termites here. So, and also mold. Mold is one that people kind of think like, oh, maybe I need it, maybe I don't. I like it just to know, hey, I've checked all my boxes. I'm not moving into a house where I find out a year from now that I've been being poisoned by mold. Because I've seen that happen on TikTok for a few people. So I don't want that for my clients. So I always just recommend, hey, get it done. Better safe than sorry, you know? Better to spend the $200 or $300 now than pay thousands in mold remediation later. Okay, guys. So, oh, hold on a second. Okay. So alrighty, guys. So once we have that appraisal done and it comes back at value, whew, nice. Only one more thing that needs to be done now, and that is the final loan approval. Once again, this is something that's going through the bank, so they might ask you for more documents, more information. If you have like a little I don't know how you say this. Like if you had a blip in your work history, say you weren't working for like 6 months, they might ask you about that. You know, there's a couple things that they'll ask you about. And once all that is set and they say, hey, okay, you're approved for this loan, we're going to go ahead and approve this loan to you, that's when your lender, hopefully you're working with our lender Dean, will go ahead and set up a time for you to meet with a notary, whether it be at your house or at a coffee shop. You're going to meet with a notary. You're going to sign all the paperwork that the bank has given to you. And once that has been done, you're going to go ahead and wire the final amount of your down payment. And then once that has been signed, sent, the loan has funded, we record title the next day, and you get your keys that same day. Oh, Dean is back.
Hey guys, sorry. Monday specials.
He doesn't care about us, y'all. That's why he keeps sleeping. All right. Does anyone have any questions about anything? I know I kind of skipped over, did a very streamlined process of this, but buying a home is pretty quick. It's typically a 21 to 30 day process. But there are those certain situations where escrow might be prolonged, where we find something during the investigation, there's tenants in place. We're still working on some things, some negotiating, some, here and there. So, but typically everything closes within 21 to 30 days. Except if you're getting like commercial real estate, that takes about 3 to 5 months.
Yep.
All right. So I just kind of went over the process. You stopped when we were talking about VA loans. Let's just quickly go over FHA and conventional loans real quick, and then we could call it a day.
Let's do it.
All right,
let's
talk
do
about
it. So FHA loans. Yeah, FHA loans. This is my specialty. I love them. 3.5% down, as you guys know, first-time home buyer loan. It's not what it stands for, but that's what it's known as. You do get the benefits and very low interest rates because these are insured by the government. So if any default happens, or if anything related to defaults like foreclosure happens, the bank is insured. And when I say the bank that had given you the loan is insured via the government. So love this loan. The only thing I don't love about it is the mortgage insurance. So mortgage insurance takes a toll on you, and it's getting controlled, right? It gets controlled through your credit score. So if you have a very low credit score, you're known as a I wouldn't say a perfect borrower, but just not a responsible borrower. Okay.
You might be shown of course, a little bit more risk than a person with a higher credit score. You might be more at risk to them.
Exactly. So mortgage insurance, guys, is when, let's say you default on a loan and the mortgage needs to be covered, right, through another third-party insurance company. That's what mortgage insurance will help cover. Of course, if you are if you have a lower FICO score, a lower credit score, or they're going to hit you with higher mortgage insurance, okay, because you have a high chance of defaulting. Okay.
I have a question.
Now, that's just the way to look at it.
Can you refinance out of an FHA loan into like a conventional loan? Oh, Jesus. Just disappeared as soon as I asked that question. Okay, guys.
Guys, what is
Okay,
happening
there
today?
he is. All right. So I was asking is, say that originally I get an FHA loan, right? And then like 3 years from now, I'm like, I'm tired of this PMI. Can I refinance into a conventional loan?
So you can refinance into a conventional loan as long as you still approve under conventional standards. So I know FHA loans, they allow you to use 57 or 56.99% of your gross income on a house. With conventionals, it's 50-50, right? It's down the middle. So you have to still get approved via the same, like your income. So if it doesn't make sense, they're not gonna let you allow you to refinance. And guys, not to mention, you do need with conventionals, you are gonna have mortgage insurance as well. But the only difference is when you achieve an 80% loan to value ratio, also known as 20% of equity of your own, that's when mortgage insurance can completely go away.
So is that why somebody would like get an FHA loan, maybe put 20% in and then switch over like a couple years later?
So what I typically see is I see people getting FHA loans, and I'm talking like 3 years ago, right? They get FHA loans super low, and then if they ever need to refinance, they'll do something called a streamline refinance. And streamline just means all FHA refinances, whether it's cash out, whether it's just rate and term. I see people doing a lot of like FHA streamlines. A lot of people don't really feel the blood when you do have very low interest rates, right? Because they always just look at the current environment and say, wow, if I had this interest rate or this mortgage insurance, I'd be underwater. So rarely do I see people refinancing out of conventional. And not to mention, guys, to refinance, it costs money. So you have to make sure it makes financial sense. And how long would it take to regain back that closing cost money that you put down?
How much does that typically cost to refinance? What are the fees?
Typical stuff, right? It would be like 2 to 3% of the loan amount. So same thing.
Okay.
Yeah.
Okay. All right. Cool. So, this is a question my dad had, and I think a lot of people probably think of it in the same way, but my dad was like, "What's the difference between a refinance and a home equity loan?"
Yeah. So a refinance is you're basically let's dissect this. A refinance, you have a first lien already, right? Or if you don't have a lien, you just want to cash out refinance. You're basically taking money out of that house, and now you can utilize that for debt consolidation. It can be used for home improvements. It can be used for whatever the case may be. That is a cash out refinance. You do need at least to keep 80 to 90% of your equity in that house. So you need 80% loan to value, 80 or 90%. So for example, let's say it's $1 million estate. That's the evaluation. The bank only allows you to pull 90% out of that, right? So now it's 900,000. Subtract any debts that you might have, right? Like the lien, like the mortgage payment. What's the payoff on that? Let's say it's 500,000. So again, guys, $1 million estate, 90% loan to value, which means they'll let you pull out 900,000 minus the mortgage that you owe, which is 500,000. You have 400,000 that you can play with. That's what they're saying. So and guys, you're having a fixed rate when you go refinancing. Now with a HELOC or a home equity line of credit, what you're doing is you already have a first lien, like you have a first mortgage, and it might be a very low interest rate. So it wouldn't make sense if you refinanced and paid off that first loan. What banks offer now is called a HELOC. And you basically are pulling some equity out of the house the same way. But in this case, you have two position liens. You have another lien, another mortgage that you would have to pay. And this is typically interest only.
Okay. Dean, are you still
starts to become principal and interest.
You were saying it's interest only? That's where you cut off at.
Oh, okay. So you typically have interest only payments until like the 5th or 6th year, and then they start going principal, interest, tax, and insurance. And guys, most HELOCs are adjusted, so they're not fixed. That a cash out refinance with, right? Okay. So good stuff, guys. Good questions. Good questions, Eva.
Okay, cool. Moving on. So we're just going to talk about bank-backed loans, conventional loans, and then I'm going to go over the purchase power of them. Hopefully it's still correct. Are rates still like 6.3, 6.5?
In our book it is, but the usual rates are like 6.7, I believe. Let me check.
All right, Dean's gonna give us a live breakdown of today's interest rates, and then I'm gonna tell you what your purchase power could be based on how much money you make, and you guys can get a rough little estimate. But if you would like to know exactly what your purchase power is, contact my lender. You can follow him right here, Dean the Lender. He's also on Instagram. Trying to get him to also make a YouTube, so don't worry,
Yeah.
guys.
And guys, you have to contact Eva first, okay? So don't contact me, contact Eva so that she can put you in place of me. And guys, another thing too, I did check rates. We're doing great right now. We're at a whopping 6.7.
What a
It's
steal.
not good, guys. I was being sarcastic.
What a steal. My God, today, 6.7. Gone are the days of 3%. You know what's crazy? Like, my dad got his house with that rate just normally.
Yeah. And guys, it's easy. Just make more money. I'm kidding. Once
That
again.
is funny as heck to say. I mean, that really is the solution in America. You want a better life, you just gotta make more money, baby. But you know, if you live in California, the opportunity to make money in California, specifically Los Angeles, there's nowhere like that. Like if you come to the city and you're a hustler, you'll make it in LA. Like you will. Like
Yeah.
no doubt about it. Because there's just so many avenues, so many different ways to make money. If look, y'all really want, I will come. Maybe I'm a consultant. I can tell you 20 different ways to make some money. Okay.
There you go.
Call me. I don't just sell real estate. I also do consultations. All right. Okay.
Yeah, don't take it for granted, guys. We live in America. A lot of people outside of country lines would love to come here and have our place, right? So we have to utilize it. Don't be lazy. And it's not me just saying make more money. It's there's ways people make money in 2026. We are in 2026. What's college? I've seen millionaires that haven't went to school, right? Guys, that's why we have different programs and products for you. Because not everything is super cookie cutter. Not everything is black and white.
Hey,
so
I made my first $1 million in a restaurant business, okay, guys? So if I can make that selling vegan chicken, then you guys can make it doing other things. Like there's so many opportunities. You never know. And when I first started that business, people used to tell me all the time, like, you're gonna sell vegan chicken? Like who even wants that? Well, Billie Eilish and Lizzo and everyone else who came to my truck wants it, okay? Clock it. Sorry. But no, for real. Like, it's like, don't let people tell you that what you're doing is stupid. Just do it. You never know. It might work out for you. It might change your family's lineage. Like, you never know. All right. So we're going to talk about conventional bank-backed loans right now. What does that mean, Dean? What is a bank-backed loan?
Yeah. So it says it by its name, right? They are governed and watched by the banks, right? So typically, and guys, I mean, depending on if it's warranted by the government or warranted by the bank, there still is going to be mortgage insurance attached to this. They have to protect their assets at all costs. You are going to have a higher interest rate with conventionals, but on the positive note, you are going to get exempt from mortgage insurance eventually. With an FHA loan, yes, it goes down and it's not fixed, but you have to understand when you own so much of your house, if you own more house than the bank does, you're still going to be making those mortgage insurance payments because an FHA loan wants that. That's they mandate it. So I went on a little tangent here, but just so you know, FHA loans very I would say moderate.
We'll go over the pros. The pros are for the FHA is that you only need a 580 to qualify.
Yes.
You have a better credit score, you'll get a better interest rate. But for the most part, FHA interest rates are pretty low, and they require less of a credit score. You could put as little as 3.5% down, so that's really appealing to a lot of people because you're getting into a house with less out of your pocket. And the con is that mortgage insurance. So that's the biggest con that we see because it adds, depending on the price of the home, like extra like $200 to $300 a month to your mortgage.
Yeah.
Now, with conventional loans, the pros that we see are if you're buying a house less than $500,000, you could put down as little as 3%. So that's even less than FHA. The PMI can be removed from a conventional loan once you hit 20% equity. And for houses above 500,000, you could put as little as 5% down. The common misconception is that you have to put 20% down on a conventional loan. We hear that a lot, and that is just not the truth. Woo! Okay. The cons are you're gonna need a higher credit score. This what 600 is the minimum, right? Or 620?
I would say so. 620 was the actual minimum, but now DU is desktop underwriter. It's another way to show that you're approved, and it has to get screened by them. They made exceptions for 500. Okay, now you guys can only imagine what those interest rates are like. But yes,
that you will be paying 9%. I'm just kidding. But
Yeah.
yeah, so that's good to know. So if you have a 600 credit score, you can still qualify for a conventional loan.
even a 500.
Okay.
Yeah, 500 credit score, guys. But your rates are, it's going to make you not want to go get a home, okay? But just worst case, gun to your head, you need a loan.
Yeah.
I got you.
So if you really, really need a house, but that credit score is maybe a little not as good as you want it to be, you can still qualify, which is good because there's people who make a lot of money, but maybe their credit's not the best. It happens. We're not here to judge you. We've seen everything. And also, if your credit's not the best, we can connect you with our credit repair specialist. Get what you need to get handled, and they can do this thing called a rapid rescore, where as soon as you pay off that stuff, we can get your credit boosted within 5 days, right?
Yeah, exactly.
So,
I would say sooner. I would say 3 business days.
all right, 3 to 5 business days, you guys can have a whole new credit score. So if you want to get connected to that credit repair specialist, contact me. My number is right here. If you're on TikTok, my number is right there above. If you're on Instagram, send me a message. And if you're on YouTube, my email is in my bio. So contact me. I'll set you guys up. Let's get a plan started because we have some clients right now that we're working with. They need to repair some things with their credit. Once we sell their house, we're going to help them find another house in Palmdale, Lancaster, which is going to be a total upgrade from where they are right now. Because in Palmdale, Lancaster, you can still get a new construction home or a beautiful, huge home for like $500,000-$600,000, guys. Is it a little far from everything? A little bit, but you know what? It's doable. I'm from there. My family still lives out there. I'll be there next weekend for a family dinner. It's not that bad of a drive, y'all. So if you're looking for a single family residence for less than $600,000 in Los Angeles County, think about the AB. It's changed a lot from when I was growing up. They have a CarMax there now. I'm just kidding. That's the plus. Alrighty. Dean, are you still here with us or have you left the chat?
I am still here. Nope,
Okay.
I am still here.
So I'm gonna go over these numbers real quickly about the conventional and the FHA. Let's start with FHA. So we got our FHA loan breakdown here. And please chat, tell us if you can see this, okay? Does this look correct to you, Dean?
Yep.
Okay, cool. All right.
See, 50,000. Put it back one more time. Let me see. Back more. Back. Yep, that's fine. PIT. Fine. Okay. Income. Okay. Purchase. Yes, this is correct, and this is assuming there's no debts, guys.
Okay, so this is assuming that you're like me and you're debt free. If you're like that, I see you, okay? Because I'm like, same. All right, so if your annual income is $50,000, then your purchase price range could be anywhere from $320,000 to $380,000, with your mortgage being anywhere from $2,250 to $2,700. So that's not bad. You can actually find a house in Lancaster around this price, and rent currently in LA is around this price. So why not invest that into yourself and just buy a house? Now, if your annual income is $100,000, congratulations. That's a nice little income to have. But your purchase range will be anywhere from $650 to $760K. Your mortgage could be anywhere from $450 and $4,500 to $5,400. And we actually have a client with this budget, which, you know, in LA things are a little bit more expensive. But with $600K to $720, you can actually go to Canyon Country and get a singular home, or Valencia, Santa Clarita area and find a nice little single family residence or condo in that price range and still only be 20 minutes from the valley or 30, 40 minutes from LA.
Exactly.
With an annual income of 150,000, your price range is between 970,000 and 1.120 million. And your mortgage would be anywhere from 6,700 to 8,000. If you have an annual income of 200,000 for our high income earners, you can afford 1.150, and that is kind of the FHA limit. So if you want more than that, we can go ahead and definitely set you up with a conventional loan. And your mortgage on that range would be about 8,200. So this is the FHA breakdown. If you do use the government-backed loans, you can get into a home, any of these homes, for as little as 3.5% down, guys.
Yes.
All right, now let's do conventional. So this is for all of our people who are interested in the bank-backed loans, or maybe you're self-employed and this is just the type of loan that you qualify for. So with an annual income of 50,000, your estimated purchase price would be about 305,000, and your mortgage can range from 2,421 a month to 2,535 a month. If you make 100,000, your purchase price is around 600,000, with your mortgage ranging anywhere from 48 to 5,000. 150, you're getting around $895,000 in purchase price, with the mortgage being anywhere from 7,100 to 74.
One thing.
Yes.
These are numbers from last month, so they changed by like $100 each.
Okay.
So they go up 100.
Oh, so it's gone up,
Yeah.
not down.
Oh, interest rates have gone up, so that means more monthly payments will have gone up as well.
Well, that's why it's important, guys, to work with Dean, because he can get you some amazing rates. Okay. Right now, interest rates are about 6.7, and we are getting clients at 6.2, 6.5. Okay.
Yep.
All right. So for our high income earners, people who make 200,000, your estimated purchase price range is 1.175, with your mortgage being anywhere from 9,300 to 9,700. For our if you're making 250,000, call me. Let me help you find a house, okay? You can afford up to 1.4, okay, with your mortgage being 11,748 to 12,300 a month. These are all estimates with no monthly debts, 5% down, a 30-year fixed rate, and the rates that are being shown right now are 6.3 to 6.5. So you're only getting these numbers when you work with Dean, because anywhere else is going to charge you the actual interest rates that they're seeing right now for 6.7. So does anyone have any
You gotta
questions?
say work with you.
Work with both of us, okay? We're a team.
Yeah, because I don't give these rates out like hot candies, guys. Like it's not a hot cake. It's you work with Eva, we do you a service. We would never give a disservice to you guys at home.
All right, so you work with me or Nicole. If you're here from Nicole's Live, you work with us, then you are getting these phenomenal rates that other people just are not getting. Other specialty loans that we have, I-10 3.5% down. So if you maybe don't have a social, but you have I-10, we can still work with you and get you into a program where you don't have to put as much down. Typically, it's about 15 to 20%. Sinem, can you do I-10 with 10% down or no?
I can only do I-10 with 15% as minimum.
Okay. So, if you're I-10 and you're looking to get into a home, maybe you don't have that down payment, think about the 3.5%. Long story short, whatever your scenario is, come to us. Let's make a game plan. Let's see what we can get you. Dean and I and Nicole, we are always coming up with unique plans for our customers, trying to fit their scenarios. Maybe you need to get your cousin, brother, uncle on this loan with you so that you can get what you need to get where you want to be. We've dealt with all different types: bankruptcies, foreclosures, haven't done your taxes in 2 years, low income, no income, low credit score. we've worked with a wide variety of people and situations, so there's no situation or scenario that we haven't seen before, and we will get you through it, okay? You are in good hands. We give our customers white glove treatment, no matter what your budget is. Your budget's 300 or 400,000, you're gonna get the same treatment as a $2 million client, okay?
There you go.
All right. Any questions? Ask away. I am here at your service to answer any of your questions. Got my lender partner here. We just went over the home buying process. We went over loan products. We went through scenarios and told you life stories about real people who've gone through real things with their real estate transactions. So we hope that you learned something from this live, and we appreciate you being here. Even if it's not you that's going to buy a house, tell a kin, tell a friend, tell that heifer you hate that we are here Monday through Friday, and we are here to serve you guys. So thank you guys for being here so
We do
much. What?
offer referral fees, guys. We do offer referral fees.
Okay. Yeah, you refer your friend or your cousin and they close, we'll give you a little ching-a-ling, okay? Spin that shit.
Yeah.
Spin that shit. Hey, no, for real. We will. We do give referral fees, so. If you guys know somebody who wants to buy a home and you need $2,000 or $3,000, call us.
Yeah. Right when we said referral fees, there's 2 other people that joined.
What?
Come on, guys.
You guys want that referral fee money? Come on now. Hey, Monica, thank you for joining our live. Thank you guys all for the engagement and for the questions. Dean, thank you for being here and being a resource for the community. We appreciate everyone who has joined us. And yeah, we will be back tomorrow afternoon, probably around 12. So we will see y'all then. Thank you, Dean. Thanks, guys, for joining us. It's been fun. Enjoy your Mondays, guys. Bye.